What if the biggest limit on your life isn't your skills, your network, or even your ambition, but your salary? Let me tell you a story about a woman named Amanda. She was earning $92,000 a year in a stable corporate job. Good title, good benefits, predictable raises. On paper, successful. But in her head, she had a bigger vision. She had already tested a side business, a digital strategy consultancy. Two clients were paying her $4,000 a month combined. She ran the numbers. If she could go all in, she projected $180,000 a year within 12 to 18 months. So she walked into her bank and asked for $30,000, not to gamble, not to travel, not to upgrade her lifestyle, but to build infrastructure, marketing, and survive the transition. The banker smiled politely and then asked for 2 years of business tax returns, audited statements, and $40,000 in collateral. She had none of that. The business was new. Application denied. Now here's where it gets interesting. 10 days later, she received a pre-approved offer in the mail. $45,000 auto loan, 5.9% interest, instant approval, no business plan, no projections, just her salary verifications. Think about that. $30,000 to potentially double her income? Too risky $45,000 for a car that loses value the second it leaves the dealership? Approved immediately. Why? Because banks don't evaluate your potential. They evaluate your predictability. A salary is predictable. A boss signs your paycheck. Money hits your account every 2 weeks. That's stability. For them. A business? That's upside. That's growth. That's independence. And independence is bad for institutions that profit from your dependence. Look at the system. Mortgages are calculated off your salary. Car loans? Salary. Credit limits? Salary. Everything is built around the assumption that your paycheck is your ceiling. But what if your salary is just the current price of your time? Here's the uncomfortable truth. The system makes it incredibly easy to borrow for consumption and incredibly hard to borrow for creation. You can finance a $60,000 SUV in 30 minutes, but try to borrow $40,000 to build something that generates income. Suddenly you're high risk. Let's run the math. If you earn $100,000 a year, banks may extend you $400,000 plus in total debt capacity, mortgage, cars, credit lines. That's 4 times your income for liabilities. But ask for $50,000 to start an income-generating venture? Suddenly the doors close. Why? Because if you succeed, you stop being predictable. Here's the psychological trap. Most people never even apply for that business loan. They internalize the ceiling before anyone tells them no. They ask, "Can I afford the monthly payment?" Instead of asking, "Will this build wealth?" Amanda didn't take the car loan. She kept driving her old Honda. She worked nights, weekends, slow growth, no glamour. It took her 2.5 years instead of 1. Today, she earns $260,000 a year, 3 employees, retainer contracts, equity in something she owns. And guess what? The same bank that rejected her now calls offering premium wealth advisory services. They said no when she needed leverage. They say yes now that she has power. So here's the shift. Stop asking what you can afford. Start asking what you should own. List your monthly payments. How many of them build equity? How many just fund someone else's profits? Automate investment into assets before upgrading your lifestyle. And every time you're offered debt, ask one simple question. Does this make me richer or just more comfortable? And every time you're offered debt, ask one simple question. Does this make me richer or just more comfortable? The ceiling only exists if you accept it. If this perspective challenged the way you see money, hit subscribe and join me for the next breakdown. Let's build assets, not cages.